S&P 500 is bouncing just over the 200-day moving average, while the Qs, the triple Qs, are bouncing just under 200-day moving average. What's going to happen? Let's talk about the general stock market, and I would also like to talk about energy in this video. Talking about the general stock market, I would like to zoom out over here and remind to everyone that since March 2020, S&P 500 has basically more than doubled. In March 2020, we see S&P 500 at 2,200, around that area. And we've been around 4,800 a month ago or so, and we're now over 4,400. So S&P is more than doubled since then. And I think it's time for S&P 500 to maybe move sideways for a while, perhaps create some sort of a consolidation zone, maybe a bit of a sideways move before the continued push higher in the general stock market takes place. I think it could look a little like what happened to copper. We see copper has more than doubled since around March 2020. And of course, after such a substantial rally, one would assume that a bit of a consolidation, this sort of a box over here, as we see consolidation box, is quite likely. And I think over the near future, copper might actually continue its bull run. For now, though, I want to leave copper for another video and come back to the general stock market. We see somewhat similar action in the triple Qs. In the QQQ, we see that in March 2020, Qs were around 170. And since then, they've more than doubled, topping at around 400. And even right now, triple Qs yesterday closed at around 355. Over here in late January, we've seen the intermediate cycle low. I've mentioned about that to the members at myfinancesteacher.org. And we've got some positions with a bit of a volatility over here near that intermediate cycle bottom. We have those positions now, sitting in a relatively modest profit for now. And yes, there are risks. I think this intermediate cycle is going to be a bit of a sideways consolidation, but we're still holding those positions. And for more details on what exactly we're going to do with that, when we're going to reduce those positions, what are the stops, and all those details, feel free to join us at myfinancesteacher.org. For now, though, what I want to mention is that never mind the intermediate cycle, even the short-term daily cycle is still pretty young at only 2 weeks old, at only 14 days old. So even within the short term, never mind medium term, there is still some upward potential. Although that potential is not amazingly high. I think perhaps over the next few days we will see a second attempt at breaking this downtrend line. And I think that second attempt is going to be successful. But how high is going to go? That remains to be seen. And again, for more details, join us at myfinancesteacher.org. For now, though, I want to have a look at the Optimism Index. We see that people are still somewhat scared. We see Optimism Index is still below the green line, and even if the intermediate cycle turns out to be a bit of a meh cycle, a sideways consolidation, I think there is a chance for the Optimism Index to at least reach a bit of a neutral levels, somewhere around 50, before we should start getting concerned about a correction back to the bottom of the potential consolidation box turning up over the next few months. So looking at what's going on right now in the general stock market as the beginning of that consolidation box, let's have a look at what happened to copper at the beginning of its consolidation box somewhere in summer last year. We see copper basically just going sideways from May last year all the way up until now. And what happened to the Optimism Index is it did recover from under 50 to just over 60, but it didn't go anywhere higher than that before copper dropped and kept dropping down to that bottom of the consolidation box. So something similar is likely on the general stock market, but perhaps is not going to continue for as long as it's been going on in copper. Maybe only a couple of months of this sideways move in the general stock market. Maybe sometime until the next FOMC meeting. That might be the driver for one more correction down into the bottom of that consolidation box. The FOMC meeting is upcoming in the middle of March, and the thing here is that the market expects that the Fed is going to hike rates. The current rate is between 0.25%. Looking at these expectations for the Fed rate hike, we see that the market shows 69% chance of a 0.25% higher and 31% chance of 0.5% higher. And depending on how these expectations change, that I think is going to influence the performance of the stock market over the next few weeks, perhaps especially the tech industry, which is more sensitive to the rates. For example, looking at this table at the bottom, we see that a week ago, the market showed 93% chance of a quarter rate hike and only 7% chance of a 0.5% rate hike, whereas now the market expectations is leaning 69% only into that 0.25% rate hike. So I expect a bit of a recovery in the short term as the intermediate and the short-term daily cycles are both pretty young, but as we approach that middle of the March, perhaps we're going to retest the lows before continuing up with the ongoing intermediate cycle. We've actually seen similar things. One of the recent intermediate cycle lows over here in September 2020, we saw the first daily cycle retesting the lows before the intermediate cycle continues higher. So perhaps a bit of agility in the general stock market would be a good thing over the next few weeks. For now, though, let's have a look at crude oil, which I think is really interesting right now. It's gained, around 45% over the last couple of months, which is quite exciting, but I think crude oil is getting quite overheated right now, and it's close to some of the long-term resistance levels. We see a bit of a resistance level over here that's anywhere between $91 to $92. That's based on the long-term 2014 lows. And as we see a couple of days ago, crude oil actually came pretty close to $91. So yeah, who knows? Perhaps another few days of upward momentum in crude oil, but I wouldn't expect anything spectacular from crude oil over the next short term. A bit of a correction is quite likely, in my opinion. But at the same time, I wouldn't expect crude oil to drop anywhere down to low 60s anytime over the next couple of weeks either, because the ongoing intermediate cycle is, still pretty young at only 68 days. Usually these crude oil cycles last for around half a year, so after a bit of a correction, I would expect a bounce before it would be time for that intermediate cycle low again a little bit later.